Thank you, Marty. And Marty, again, thanks a lot for pulling this together. It takes a lot. As many of the panelists know, Marty is tirelessly working at night during the weekend, so thank you. I moved from the Bay Area, and I have a bunch of friends that just moved to Dallas area and Austin from the Bay Area. So I guess we're glad to welcome everybody in. But I've seen everybody buy a condo here and then buy a place in Montana or Park City. So we'll see on the ski slopes. I was fortunate to be involved in Fintech for many years. And one of my biggest observations was sitting on the world's largest trading desk at UBS in the late 90s, early 2000s, as electronic trading kind of created a bunch of disruption and opportunities. So I thought that might be a good way to frame what looked to be very disruptive. The sun actually brought lower commission rates, tighter bid offer spreads, and one might argue is now the backbone of the ETF creation redemption process, which in and of itself created a new round of financing and capital market activities for portfolios and capital. So we're very, very fortunate today to have Nick with YourCapital, Alan Reid with Reid Partners, and Brad Rotter, excuse me. And so what I'd like to do is have you guys just start with you, Brad, and tell us a little bit about your firm, a little bit about what your mission statement is, and then we'll go to Alan, and then we'll go to Nick. So Brad, turn it over to you.
Okay, thank you. Nice to see you all. I'm sorry I can't be in Austin in person. This is my 425th day in strict self-quarantine. I saw this virus early from underground video coming in from my Bitcoin knuckleheads. So I had to drive to Austin to avoid planes and hotels. I didn't start trading commodities until I was 16, grew up on a farm in Iowa. There wasn't much to do there, so I was in charge of hedging our one corn contract. After West Point in the Army, I raced back to Chicago and helped pioneer a new asset class called financial futures. That was trading futures contracts on treasury bonds and bills. Nobody thought it would work. I thought it was a pretty good idea because money is the largest commodity of all. It ended up exploding, doing very well. I took the proceeds and started investing in another new asset class called hedge funds beginning in 1982. And I started seeding hedge funds with venture capital in 1985. So I've been involved in that space for a very long time. I traded on the floor of the Chicago Board of Trade, the Chicago Mercantile Exchange, grown men yelling, kicking, screaming, shoving, and spitting. It was fabulous. But it was obvious to me that the floors were going to go away. Indeed, I was reminded just last week, I was having dinner with Leo Melamed, who is the godfather of commodities in Chicago. We were having dinner at Gene and Giorgetti's, and I said, Leo, your Chicago Mercantile Exchange will someday be a large, irregularly shaped museum. And he said, not in my lifetime, Sonny. So it indeed is electronic. Buck, I actually had done the first electronic trade ever on Wall Street in the bond market with a firm called Cantor Fitzgerald.
Of course.
And I almost got fired when my boss found out that I had done an electronic transaction because IvyFON wasn't very interested in having the prices displayed to the public.
Yeah.
So that's a long time ago. I moved west to the Silicon Valley to be closer to technology. Have been heavily involved in tech, internet, and breathing cryptocurrency for the last 9 years. So that's been the most interesting asset class that I've been involved with so far.
Thanks a lot. Alan, I know that you've been focused in a lot of areas, especially bringing some of the more of the arcane to the mass market. Can you tell us a little bit about yourself and your firm?
Sure. Well, I'm glad we got started, and I got a chuckle out of Bradley's intro. started early days at Morgan Stanley, Dean Witter, spent most of that time almost getting fired, doing all these things that the firm was anti, before FinTech was FinTech, things like CRM, having the gall to use email, Blackberries, and educating the firm on modern portfolio theory. And variance optimization. I ran a firm called Forward, about $7 billion asset manager that was linked with my partner was Gordon Getty, and my co-founder was Ron Pelosi, so very integrated into the San Francisco world. Sold that, and I've been working, really just advising in some great family offices and entrepreneurs, advisory board to Coin Circle, so a little bit in the crypto. Unfortunately, I wasn't as early as Brad. Tribal Planet, which really does a lot of education for kids online, Brightbucks, and then some other cool stuff from Smart Shipping, for a company called Forward Ships. So, I've got my hands in a lot of cool stuff since selling Forward, but really, I think my heart's always been in FinTech. I ran Morgan Stanley's online brokerage back in the 90s when, other than Brad, not many other people had done an online trade, doing a lot of trading over Palm Pilots and, some cool things like that. And, we can talk more about that. But, to me, I'm just seeing a lot of opportunity here to continue to use financial technology in a lot of different areas, and looking forward to this panel.
Thank you. Nick, can you tell us a little bit about YourCapital and what you have going on? Oh, you're on mute, Nick.
Great. Thanks very much, Chris, for moderating. Thanks, Marty, for putting this great event together. Thank you all for taking the time to listen to us. In terms of my background, unlike Bradley, I did not grow up in Iowa, but I grew up in communism in former Yugoslavia, where investing was just not allowed or so I could not wait to make it to the States. Came here for my education and grad degrees, then ended up working at Bank of America for a number of years. And from Bank of America, made a switch to Citigroup. Then from Citigroup, worked at a hedge fund of funds in New York, worked at Tom Weisel, the investment bank, for a number of years. Then at the eye of the financial storm, helped set up a private bank out of Greenwich, which is technically a multifamily office / private bank, where I was the head of research, looking at all sorts of investments. And then I realized that one of the spaces that is very attractive, especially during downturns, is investing in early startups. So a couple of years ago, decided to take most of the family money and some families that I've built relationships with, and to invest in early stage.
Hey Nick, can you move closer to the microphone? Because
Sure.
your voice is coming in and out.
Oh, sorry about that. So a number of years ago, decided to make the switch into the early stage companies and invest in startups. And along those lines, I actually came across a company called YourCapital, which, in the easiest way to understand it, it's the anti-Robinhood. It's an AI and machine learning platform for do-it-yourself investors in the US, meaning Robinhood is chasing traders and going after the young demographic that wants to trade. YourCapital is actually going after the do-it-yourself investors that know that they don't have the market timing skill, that know that day trading is probably not a profitable strategy, but rather looking to invest longer term to build their nest egg. So employing AI and ML, we help do-it-yourself investors, which is a very large demographic out there.
Well, Mark, why don't we start with you? You brought up Robinhood and Reddit, and how are those recent developments impacting the opportunities, broadly speaking, in FinTech, and in particular YourCapital? Talk a little bit more about enabling individual investors through machine learning and AI, and how are you competitively positioned?
Sure. So I think Robinhood and then what happened, Wall Street Bets and Reddit back in January and early February, actually brought to the forefront trading for for the masses. I mean, masses would trade in the past as well, but we remember in the old days, cost of trading was in fractions, was very high. Then there was a cost per share or so. So when Robinhood came along, the market caps of traditional brokerages out there went down significantly. So they, in a way, disclosed that technically, if you're a brokerage, you're probably getting paid on one end from companies that are promoting products, from order flow, margin interest, and a whole number of ways of doing it. Plus, you're charging the end user or the investor to trade. So through Robinhood, removing the fees for trading, I think brought an influx, especially of younger demographics, some demographics to invest. Plus, fractional shares and technology advances in the technology have actually made it possible for folks to invest in fractional shares. So a lot more people have come in. So I believe Robinhood actually helped, in a way, the overall movement more towards fintech, especially from younger folks who typically did not think of investing as much as they do now. And it was not as easy and as simple. And in a way, Robinhood made it look like a game. But if you look at the Robinhood app, it looks like a video game more than anything else. Now, with what happened in January remains to be seen. I personally believe the jury is still out. Regulators are in. Will the order flow payments stop? We all know about the discussion or what has transpired in Robinhood and Citadel. So it remains to be seen where that ends up. My guess is there'll be some type of regulation. There'll probably be, at the very least, more disclosure involved. So when someone trades through a free app, they will have to, or they'll have the ability to know that their information is being sold, that somebody else is monetizing their transactions. But it remains to be seen. I really don't have a strong opinion one way or the other how will the regulators respond to the Robinhood saga. But what I also believe the Robinhood saga has disclosed that a number of folks there who are probably more mature than the early 20s or young students, so they've read quite a bit and they follow some of the other investors, know that market timing is a very difficult proposition. And some studies show that 99% of market timers end up underperforming or not making money. And those folks actually need a platform, need a solution to go somewhere to save time and money. Of course, an argument could be made that Fidelity or Schwab or some of the traditional brokerages are already doing that. Yes, but it's like going into the supermarket to try to figure out what the heck do you want when you have millions of articles to choose from. So the same thing, we have had proliferation in terms of products, from stocks, bonds, and ETFs, exchange traded funds, you name it, in the public market. So how does a sophisticated investor narrow those choices and actually don't spend too much time or pick the wrong investments? And deploying AI and machine learning, which is what YourCapital is doing, helps these folks to, first and foremost, whatever they're doing currently, analyze, have they made the right choices? Are they paying the lowest possible fees? Have they made the right allocation? And then going forward, machine learning and AI can actually replicate a lot of the tasks that humans can do today, and trying to eliminate the human error and human factor in suggestion or allowing the do-it-yourself investors created a very, very nice opportunity. So we believe, and in short, that a Robinhood saga has brought the discussion to the forefront, and the more sophisticated people who are not jumping in on the day trading wagon, but more on the wagon of building their nest egg and thinking long term, they actually need a solution like what the YourCapital is offering. And what's very interesting about our solution is that we do not charge a fee, because there's some robo-advisors, there's some other solutions out there that are similar to a degree, but they ask two things of the investor. One is that they charge a fee, and B, they ask the investor to relinquish and control of capital. And what we have found out that do-it-yourself investors pretty much prefer two things: A, not to pay fees, and B, to be in control of their own capital.
Well, I appreciate that. That's quite a lot going on. Alan, let's turn to you. I know you said you focus on some of the proxy voting and ESG investing. What are some of the areas of finance that do you see that's most likely to be disrupted through innovation, especially for consumers? And where does fintech and the build out of that really help in your area?
Well, I love what Nick's doing. People want advice, they want access, they want to have a voice. really what I'm seeing is, especially in proxy voting, if you think about what's been going on culturally for the last couple of years in the U.S. and earlier in Europe, is that people, want to be empowered. There's some criticism of corporate structure. I would argue that they just don't understand it. And there's a vehicle to have a voice. It's called proxy voting. 95% of individual shareholders don't do it. So guess what? You don't vote, you don't have a voice. You want to be empowered, figure out how to vote it. And to me, there's a decent amount of power, powers that be that don't necessarily want people voting proxies. They don't want to tell people that securities are lent out, and they may not actually have a vote. And they may not want people realizing how they're making money. But if you think about what happened at Reddit, and what you see is that individuals want to have power. And I just came from the ICI's winter conference. It's going on at the same time, and I don't know, I would say every speaker talked about ESG. Focal point in mutual funds is people want to vote, want to feel that they're doing something for the environment, that they're having a social impact, and that the governance is good. Today's proxy voting structure is set up to basically deny all those things, simply because of how antiquated it is. If indeed America believes in having a voice, having a vote, then what I'm working on is basically a cool startup that is going to empower people to do that. And I think that's really what, to me, really starts to get exciting and interesting, because getting people back in and understanding to the corporate structure that it's not bad. There are avenues for them to have a voice and transparency, and it's really through proxy voting. So, to me, that's the great equalizer and the opportunity. So many people say, well, only 20% of average corporation is owned direct. That's what you need to get supermajority. When you talk to activist investors, they've never had access to this group. And I think lastly, just to try to get people thinking about it, start thinking about what's going on with Exxon. If you're not familiar, check out Engine number 1 and a couple others. But really what you're seeing is institutional investors are no longer sitting back. They've realized that they haven't done well by divesting. They haven't, we wouldn't be in global warming situation if indeed this whole divestiture idea had worked. But in general, what's happening is when you look at CalSTRS, the Church of England and others are really providing leadership in this space, and they're going and they're actually voting their shares. And if you think about it, just like the Reddit scenario, what we see is that individual investors have always followed institutions. And really what we're seeing is institutional investors standing up and starting to get involved in the selection process, not of these sort of silly, non-binding shareholder initiatives, but in really starting to look at who are the board members. So we just saw Jeff Ubben joining the Exxon board. That wasn't by mistake. Jeff's a well-known activist and focused on what new definitions of his on ESG. So really what we're seeing is that there's an opportunity for people to engage. Technology empowers people. And I think we're just going to see more and more of it, whether it's through the advice and their asset allocation, like Nick's talking about, or and I know Brad knows a lot more than I do in the whole AI space, but realistically, data and technology are going to continue to grow at leaps and bounds, far beyond what I can imagine. But to me, one of the great opportunities here and the equalizer is going to be proxy voting and a modernization of that.
Well, certainly you sound like to be at the tip of
Hey,
the
Alan, I'm
spear.
sorry. I got to jump in here because I'm in the great state of Texas right now.
Yep.
And I'm from the great state of Florida. And I love ESG. I think it's great, especially when people want to pay for it. A lot of corporations are already doing ESG, right? I mean, but to me, it's amazing how people don't really address the elephant in the room in ESG, which is that our food companies are killing our people, right? And then our retailers have gone crazy with packaging. If you look at what you had in packaging 30 or 40 years ago versus today, I mean, the amount of plastic that's being used, even when I get something from Amazon, nobody's going to be stealing, well, I mean, maybe they'll steal it off my porch, but nobody's going to be stealing Amazon stuff right? So, but their packaging is outrageous. So nobody addresses these issues about the horrificness of our food industry, right? And which the impact on the health and well-being. So we know the COVID statistics, right? Countries where obesity is prevalent had a 10 times rate of death in COVID versus ones where there weren't obesity, right? So nobody's addressing this. And to me, that's like ESG you can do today. Any thoughts? And the other stuff,
it's funny because
the other stuff is the states' rights guys, like I am. I see there's problems with the Commerce Act. But anyway, continue.
Marty, I couldn't agree with you more. I mean, part of the challenge here is everybody says they're ESG. Everybody's sensitive, right? Well, then why is it that Amazon's not using reusable packages? I mean, it's like a constant conveyor belt to my house. So why is it that all I'm doing is throwing away their boxes or trying to recycle them? And food is clearly another issue, another area. But what I'll tell you is that, yes, every corporation says they're environmentally sensitive, right? But when you look at their annual reports and socially responsible, those that don't have diverse boards, they don't print their photos. Why? Because it's hard to figure out the diversity without looking at the photos. You start looking through, everybody, it's what they love to call, greenwashing, sort of like whitewashing, but everybody's green. But, and I think that I would just call on all of us to start saying, if we really think so, what are we using? Are we using, single-use containers? It's a battle that I still fight myself personally, is that how many single-use containers do you use in a day? But I think the reality is...
Understood. My only comment on diversity, I'm Hispanic, right? And 6 different genetic types. It is my 23andMe, right? So the room here is full of people that are of different ethnicities right now, and so is the audience, and you've got a tremendous amount of immigrants and first generations in Silicon Valley who have done tremendously well. To me, the issue is education. It really isn't diversity. And it's about education when, right? So, look at Nick. Nick's an immigrant, right? He's fantastic. He's done fantastic, right? So, and probably 30% of our presenters at any point in time are immigrants. So it all depends on life view and knowledge. And, so that's where a lot of this stuff is overstepping each other. I'm for DeFi. I'm for everything, right? Anything decentralized. So maybe we can address that. But let's get back to fintech and talk about how you do DeFi.
Marty, I'll just ask you one thing. How many proxies have you voted for diversity? How many actual holdings do you have that you voted for? You voted your proxies.
I don't get involved in that. Yeah, to me, it's so there's the question of access to public markets versus access to private markets, because there are fantastic minority entrepreneurs in Florida and Texas. Anybody who lives there knows it, right? And there's obstacles to entrepreneurialism in California, although there are still fantastic immigrant entrepreneurs in California, right? So to me, it's a regulatory issue, right? And if anybody wants to have an offline, if you are a minority and you're running a fund and you want to have an offline conversation with me about it, feel free to approach me. I will take you through all the ropes. I have had dozens of people of different, persecuted minorities approach me about starting funds, and I take them through the steps, et cetera. No issue. But I think a lot of people have made lots of steps in progress. To me, the issue of diversity is education, right? Right. So the education imbalance is this: 10% of the U.S. goes to private schools, but they make up 50% of the top 20 universities. That simple, right? So that has to end, or else it's just going to continue, because it's about access to opportunities at the right time. And look, a lot of people here went to Ivy League schools, you went to NYU, whatever. It's just the way it is. So it's about access to opportunities at the right time. So I'm sorry, you guys can continue.
Sign you up.
Let's go. That's a really good point. Let's turn to Brad a little bit on education. Brad, 10 years ago, 9 years ago, you were banging the drum about cryptocurrency and investment returns and fintech. What are you thinking about now? Where do you see some of the biggest opportunities in fintech for returns?
Okay, I'd be happy to. But I want to circle back to Nick just one moment when he was talking about young investors. I wanted to share with you the best tweet I have ever seen, which was about a month ago when GameStop was gapping up and gapping down. I saw a tweet from a young millennial who said, "In all of my 6 days of trading, I've never seen anything like this." So
a lot of history.
there
Hey,
is
Brad, is there an NFT on that?
well, that's
Did somebody put a blockchain on that?
don't get me going on NFTs. No, Marty, there is a real interesting segue for governance and voting to our fintech discussion, and that is we're seeing an early glimpse of a complete revolution of the way governance is constructed and elections are held. It's amazing now how quickly you're seeing in the blockchain space the ability for organizations or DAOs. If you're not familiar with that term, it's a digital autonomous organization. It's happening at breakneck speed. One interesting ramification of the pandemic is that the pandemic caused a Cambrian explosion in blockchain development. And the reason for that is before the pandemic, all these blockchain characters, including me, were living on airplanes going from conference to conference to conference, and nobody was getting anything done. When the pandemic came, they were locked down and people actually started coding, and the development in the blockchain in the last year is unprecedented. The analogy that I use, it's like having 1,000 golf foursomes playing universal best ball.
Hey, Bradley, my only quick question about this is like you're the master of crypto security, right? And so, you know, and also there was like a fantastic Anderson. I listen to a lot of podcasts. There's Anderson Horowitz and a couple others on Spotify that address kind of security and the issues around that. So maybe you can talk about that in relation to fintech and, you know, and also I don't want to just make this blockchain centric. I want to talk about the green fields of non-addressed fintech, like unbanked, you know, or bankless, or, you know, et cetera. So
one of the most exciting promises I think that blockchain is going to give us is in revolutionizing the intellectual property world. That is a gigantic asset class, but has never really become so because it's fragmented and clunky and lumpy, and it's not ever been developed into an asset class. So I seeded a company called IPWE, which is putting the world's IP system on a blockchain. Once you do that, you can do things more easily that were hard to do before. You can buy intellectual property, you can sell it, you can lease it, you can license it, you can hypothecate it, you can build portfolios. So I think that's going to unlock a lot of value that's currently on the balance sheets as intangible assets. So that's one exciting, non-obvious example of fintech. Fintech is coming though. It's impossible now to stop. If I'm right about cryptocurrency, banks will become as plentiful and as useful as Blockbuster video stores. And I'm serious about that forecast. I have
Bradley, you know, so my only comment, Bradley, is that was it like 5 years ago, 6 years ago, you made your presentation on blockchain, Bitcoin to our group in Newport Beach?
No,
like 6 years ago on the white paper.
I think it was 2 years ago.
You were pretty spot on then.
At that conference, I said Bitcoin will be the highest performing financial asset of your lifetime, and you know it's so far so good. I'm still sticking to that forecast. You know, one of the macro ways to look at Bitcoin, and there's some really other fabulous projects being developed that I'm involved with. But one macro way to look at Bitcoin is that it gives fun perspective. There's only enough Bitcoin for every millionaire to buy 1/3 of a coin. That's all there is. And several millionaires are deciding to buy more than 1/3 of a coin. So as an old commodity trader, and I've been trading commodities since I was 16, this is a cool differential about this particular commodity. Never before has there been a commodity that had its own mantra. It has its own slogan, and you can see it at the Bitcoin conferences. You can see it on the Twitter handles. It's called HODL. Are you guys familiar with that term? HODL. It's on every T-shirt of every Bitcoin believer, and the slogan stands for "Hold on for dear life," and it's a mantra. And everybody that has believed in that mantra and held on for dear life has been very amply rewarded. It's the only commodity that has its own battle cry.
Bradley, it's been phenomenal. It's amazing because I was there at kind of inception, at least in 2013, right, with the Pantera guys and other guys, and I have never seen more wealth created in one thing, and an asset that doesn't really do anything.
Yeah. I'm an investor in the Pantera fund. I just saw a note. I haven't studied it, but the fund I'm in is up 1,756% in a year. Last year.
Okay, so can we divert away from Bitcoin and talk about other opportunities?
Marty, let me jump in because while some of us have really enjoyed the upside of Bitcoin as an investment. I think what Bradley was talking about, when you start thinking about the opportunity for blockchain and the documentation of all that IP, you just think about that. I mean, it runs into proxy voting, it runs into all sorts of different areas where it's the documentation without a lot of fees. In comparison, if you think about my friend Mike who had started SoFi and is running Figure today, has been working with basically municipalities to basically move all the mortgages off, and we no longer have to pay these crazy fees when you sell your house. Why the government maybe should get a little of something, but who are all these middlemen? I do think that what you're going to see is the sort of all this middleware, middle persons is going to disappear. And I think we've all seen just carnage left and right of different organizations that have come and gone that haven't caught up on the technology side.
Hey, Alan, there's going to be tremendous repercussions in that.
Absolutely.
Yeah.
So Nick,
We got about 10 minutes,
talk
Chris.
a little bit. Yeah, and we want to. Hey, everybody who's on the line or in person, please ask questions of this panel. But I want to turn to Nick a little bit. We talked a lot of areas that we should allocate to. Nick, do you have any thoughts on areas in fintech that we should absolutely avoid like the plague?
I'm obviously biased because of what YourCapital is doing. So I would argue that what we have about 7.8 billion people. About 7.8 billion people in the world and in developed world in terms of the Gen Zs and millennials. They're creating a lot of wealth, and I think they're learning something along the way that it's a lot easier to accumulate wealth if you actually invest versus a paycheck. Because if you look at the federal budget, about 2/3 of federal budget funding comes from payroll taxes. So if you're a young fellow, you learn pretty quickly, better off investing and doing quickly. So I would argue that opportunities are probably targeting the masses, whether it's payments, whether it's investments, whether it's simplifying their lives and lowering their fees, whether it's helping them invest more effectively and trying to use machines. Because when it comes to simple tasks, I think humans are very complicated, can do a lot of tasks greatly, but when it comes to one task at a time, I would argue that machines can do it a lot better. And with the advances in AI and machine learning, we'll probably see proliferations of solutions that say in the past were only reserved for very deep-pocketed investors. So I'm biased based on what we're doing at YourCapital. So I would say the targeting the masses and delivering solutions to the masses, probably a better opportunity. I worked at some very large financial institutions, and I would argue that innovation typically doesn't come from large financial institutions, but we know they have deep pockets and they're trying their best, but there's too many meetings, too many people saying nay, and too many compliance folks kind of putting roadblocks in terms of innovations at large firms. But when it comes to DeFi, the larger firms that we see today have no choice but to probably gobble some of the fintechs that will disrupt their lifetime. I mean, very simple question. If you have children or grandchildren at home, what was the last time you saw them writing a check? They don't use checks anymore. It's all electronic. It's all done in a matter of seconds. So why does a check need 3 days to clear in the old days? So all the young folks, I read a study a number of years back that baby boomers were expected to have 2 jobs in their lifetime. Millennials are expected to have about 30 jobs in their lifetime. The difference is baby boomers needed to go to a library to research something, and the millennials need to pull their iPad or a smartphone in about 15 seconds using Google. They have the answer. So there's no patience among young people. And I think that in itself will drive some of the larger firms to gobble smaller fintech companies if they want to survive. Another stat to look at, if you look by decade, the largest financial companies, if you go back, 5 or 6 or 7 decades, very rarely do you find the same institution being among the largest ones 2 or 3 decades in a row. They keep rotating. So I would argue that innovation will come from smaller firms, will probably be more lucrative, a lot greater upside if you target the masses and you deliver solutions to the masses. But there's money to definitely be made in DeFi and targeting processes that are inefficient now as well.
How about you, Alan? Any kind of closing comments or thoughts?
Well, having been at Morgan Stanley and I built something similar to what Nick has, sort of that similar kind of thing 20 years ago, and the firm buried it. And they, I won't say it competes with what Nick's offering, but that same sort of mindset. They rolled it out 20 years later, and I'm reminded back in the day in the online world, we were trading with a company called Madoff, and actually being able to clear small cap trades immediately, and the bigger firm Morgan Stanley couldn't do it in 24 hours. So it goes to the fact that you start looking at the Kodaks, the GMs, the GEs of the world. Those were, when we were growing up, those were the golden, the Nifty 50. You would buy those and hold on. Those are the ones that are just nosediving today. And so this is back to my whole dialogue there, is that those are the ones with the board members that don't change. Those are the ones that basically aren't bringing in and aren't encouraging innovation. And so that's going to be what has to change, is that the whole look and culture of innovation in today's corporation is still not there, and it's in these startups, and it's the entrepreneurs that are bringing new vision and new ideas. And that, I think.
Hey, Alan, just real quick, so you partnered with one of Pelosi's relatives on a fund, right?
Yeah.
So I mean, there's a lot of political repercussions of DeFi and a lot of the other. I mean, senators can't go and work for a crappy private equity firm or hedge fund after they finish their Senate term or House of Representatives terms, right? If DeFi really breaks loose, it's going to be harder to go work at a bank because those jobs won't be there, maybe.
Or do generals go work at contractors after they've been in the Army?
Thank you, David. But my question, Alan, is political repercussions, because I mean there's political repercussions on Bitcoin, right? But what are political repercussions on all of this DeFi that's going on, et cetera? Is it unstoppable?
I mean, what a mess, our political structure. I think that the best thing one can do is invest in things that aren't dependent on today's political environment, and regulation. And the cool thing is that technology allows you to migrate and set the new standards rather than waiting for them. So I think if you think about Bitcoin, it's basically what happened, right? Was that they set new standards and they did it aside, and I think that that's probably the best way to go. I don't want to try to get into predicting politics. I mean, I refuse to participate in those two parties. They drive me nuts.
But do you know the Bradley Tufts story? Bradley Tufts is a guy. He's a lawyer. Was lieutenant governor of Chicago, of Illinois. UPenn guy, University of Chicago law lawyer, and he ran Bloomberg's campaign, et cetera, et cetera. And just out of the blue, Bloomberg said, "Hey, can you come in work?" Bloomberg was like a real big champion of charter schools, and Tusk designed this campaign to make charter schools a reality in New York. And after that, they just loved him, and they said, "Well, you see, like you're the guy who knows how to get through all this political bureaucracy." So I've got this little startup. It's doing something called ride sharing. Can you work with it? And 4 years later, he gets Uber legalized in New York and Chicago, London, Rome, et cetera. He makes like $500 million from doing that in stock, right? So like his greatest trade is that he was charging like XYZ amount an hour for his work. And the guy from Travis called him up and said, "Hey, can you take half of it in stock instead of hourly pay?" And he said, "Sure, why not?" So, he got several $1 million of Uber stock. So, I mean, to me, DeFi needs somebody like a Bradley Tusk who's going to, obviously there's a lot of advocates, right? But they need somebody who's going to be the advocate to push them through all this bureaucracy, which is really stopping change, right? Does that sound accurate?
I'm with you, Marty.
Yep, great. Any other parting comments, Brad?
Brad, what do you?
Marty, it's not just DeFi that's going to rock the world. All of the DeFi and the development that's going on in lots of different areas it's a small glimpse of what I think is going to be a wholesale decentralization and change of stockbroking as we know it, banking, finance, Wall Street in general, accounting. The use of blockchain in accounting it's the biggest breakthrough in the world of accounting in 600 years. Since double entry accounting, the blockchain will be triple entry accounting. So we're seeing the early days of the glimpse, and that's why you're seeing some of these currencies move tens of thousands.
There's actually a great podcast on Anderson Horowitz, and again, I'm going to go back to those guys, and they're talking about what was the political group that was they were kicked out of they had like a Twitter replica. They were conservative, and they got what was the name? Parler, right? So they're talking about they call it the Parler moment, when somebody was deplatformed in a day, right? And they're saying it seems like DeFi hasn't gone far enough. They're like saying everything has to be decentralized. And actually, I had a conversation with Steve Waterhouse probably 4 years ago, and he's like, "Yeah, sure." For those of you who don't know, Steve was one of the founders of Pantera, or a partner at some point in time of Pantera on the crypto side. So I mean, Bradley, does it need to go further?
Yep.
Decentralization?
Say again? Does
decentralization need to go further?
Oh, everything that can be decentralized will be decentralized.
Got it.
I mean, the case in point was the Texas freeze a couple of weeks ago. The centralized distribution of power failed. The centralized distribution of money that the Federal Reserve is printing shall fail.
So I have a very interesting comment. I was talking to somebody who's like a software developer, and he actually fits 100% into the YourCapital side, although I think YourCapital has to develop a crypto side to it. So he's like, I had he's not married. He's like 36 years old. He started investing when he was like 24. And he's one of these guys who like lives by that whole Dave Ramsey philosophy of like living only 1/3 of how much money you make. So he's like, I found out by investing that penny stocks really suck, right? So he's like, I'll never, total illiquidity on his penny stocks he invested in, totally bad. So he's like, but then I put a whole bunch of money into Bitcoin when it was cheap, and now it's like, his return is way more than 7 figures, right? So, so that's where YourCapital comes in, is that you've got all these guys who suddenly, better than middle class income, and they need guidance, right? They don't want to be traders. They just want to invest. So Nick, do you have any parting thoughts on that?
Yeah, absolutely. So crypto is on our radar screen first. We're raising a seed round. We're looking for about $3 million. So not too long ago, I sat in your shoes, meaning it was an allocator looking to deploy capital into interesting areas. And this is how I came to YourCapital. And absolutely, so our lowest hanging fruit is to go to do-it-yourself investors, help them save time and money now. And then the second inning is definitely crypto, because DeFi and decentralizing everything is is the way to go. We believe we'll get there pretty quickly. And as I said on the outset, I grew up in a country where everything was centralized and nothing worked. It failed miserably. So I'll argue the same thing. Centralization does not work. Free markets do work. And then innovation, helping the folks who are creating money, creating wealth, especially early on, to jump on the bandwagon using AI and machine learning to get to the finish line. I think we're in a very good position. So gladly talk to anyone offline that's interested to explore more what we're doing at YourCapital, where we are now, and what we'll do with the capital we'll be raising very shortly.